David McCoy here, OHMO Properties and Real Estate Matters. We've been doing a number of videos, and we had finished a series on commercial real estate, frequently asked questions, and a couple of days ago we started up a series on things that real estate investors typically ask or might be interested in. And today I thought we would talk about a self-directed IRA. If you've not heard of that before, if you've heard of an IRA, I think probably almost everybody knows what an IRA is. It's an individual retirement account. And with those accounts, we're allowed to put in a certain amount of our income every year. And that income can be invested, and then we are not taxed on that the whole time it's in that account, right up until we retire. And so it basically is the same thing. So a self-directed IRA, and you'll see the initials SDIRA. That's what that stands for, self-directed IRA. So the way that the IRA is set up is you're allowed to invest in things yourself. You don't necessarily, it doesn't have to be a stock fund or a mutual fund or anything along those lines. It can be a number of things, and it can be real estate. And so you can manage that yourself, and so that's why it's called a self-directed IRA. Now, it does have to follow all of the rules that you have in an IRA. It can't be like a separate bank account that you get in and out of. You're not allowed to do that. If you take money out of it, you would follow the same rules as if it was an IRA. If you took it out, and I'm not a financial advisor, so you need to refer those kinds of questions to a financial advisor, but I believe your financial advisor would tell you that if you tap the funds from your IRA before you hit retirement age, that you would have to pay the tax that on that money that you took out that you would have paid if it hadn't been in an IRA, and you would have to pay a penalty for doing so. So it's not like just an account that you have to do it. You have to set it up, and it has to be followed by certain rules. And I won't go into all of that. That's a pretty complex thing to learn. There's some good books about it, but and there are some companies actually that will help you do it. They won't serve as your financial advisor, but what they will do is they will set up your account for you and try to make sure that you're in compliance so that you're not violating any of the rules. So that's the way it works. So with that, then instead of investing in, say, stocks or mutual funds, you can buy real estate. And so with that real estate, inside that account, you can do pretty much anything that you might do with real estate investment. And by that I mean, you know, if you buy rental properties, and they're in that IRA, then the rental properties can be earning whatever income they would be making, and that income would go into your IRA, and you wouldn't be taxed on it while it was in the IRA. The situation with IRAs is eventually, you know, when you start taking the money out of it at retirement age, then you do end up paying your tax on it. But in the short term, you're able to just accrue those earnings over time, and you can then not have to pay any tax on it. Now, the tricky part is that it all has to stay inside the IRA. And so that IRA has to pay all of the expenses for those properties, and any improvements, anything that has to be done to that, all has to be done inside that IRA. If you start contributing personal funds or paying bills yourself or something like that, then you have invalidated that IRA, and it in essence makes it you can no longer benefit from the IRA, self-directed IRA in that way. There are a lot of rules. We can kind of talk about some of them. Your IRA is allowed to borrow money, but it would be by the IRA. The IRA would be borrowing that money, not you, and it can't borrow it from you, and you can't like transfer personal property that you already own into the IRA. The IRA would have to buy it, and so you wouldn't be able to get it to buy it from you. It would have to be a different property, and they set those rules up. Basically what they're trying to do is make the rules of the game fair, so that people aren't just taking advantage of it. But those things can be a little bit of a challenge. One thing, there's all kinds of stuff that you can do. You can actually, if you have money in your IRA can loan money to another IRA. So you can have a situation where, say, you wanted to invest in real estate, but you didn't have enough funds in your IRA to do it, but you knew someone else who had an IRA that had a lot of funds and they didn't know exactly what they wanted to do with those funds. You could get that other IRA to loan your IRA the money to purchase that property. It's really pretty surprising. Now, I've been calling it IRA, the SDIRA, the self-directed IRA, and that is the case, but you can do this with your other types of retirement accounts too, 401k accounts. And again, as I said, I'm not a financial advisor, and I don't want to be offering financial advice. I just want to make you aware of it and let you know that it's possible. Now, it may be that your financial advisor, maybe they may not be an expert in doing it this way, or they might see it as a bit of competition with themselves. I don't know, but it is something you can talk about with your accountant or financial advisor. And there's some good books. I'm sure there's some good things on the internet and YouTube as well. I think I've seen a video on YouTube before that's pretty good. But you can do that, and that's a way. Not many people know that, and not many people take advantage of it, but it is entirely possible to put your real estate investments inside your IRA, and you can really magnify how those do over time, because you don't have to pay the tax on it. I think anything more than just that. Obviously, we're just kind of scratching the surface here, and I'm not, as I said, there's just not enough time to go into greater detail than that, and I think it would be a disservice if I went too far, because I don't want to be perceived as offering financial advice. But you should be aware that is one thing you can do, and it can be a very smart move. You should, if you are interested in that, you should talk to your accountant or to a financial advisor. There are, as I said, some companies that are set up to help people do that. But you are ultimately, when you do that, you are ultimately the one responsible. You have to be the one who is managing it. So, I guess that's really the highlights. I think that that's probably enough to kind of help you understand how it works and what is, kind of enough information for you to look it up and see. But that's another one of those sort of little known, kind of cool little real estate tricks that could be really helpful. Especially if you are a real estate investor, it can be something that can be a really, really good deal for you. So that's it for today. I hope everybody is having a terrific day. And if you found that this was, you like this video, please click like for me. And if you know someone who might benefit from this, maybe somebody who might want to set up a self-directed IRA or learn more about it, I hope you will share it with them. And if you want to see more of these, please click subscribe. I don't know exactly how many. I'm going to do several more. I don't know exactly how many on real estate investment. And then after that, I'm not sure. We may go to international real estate after that. There's just so much to talk about with real estate, so many ways to do it, and so we will definitely be having these go for a while. So if you got a question or comments, please contact me, leave a question in the comments, something. Love the feedback, appreciate the people who've been watching and sharing, and anyway, I'm just hope that we can keep this up. So thanks very much again, and have a terrific day, and I will see you next time.